brings us to a surprising move, or really not a move, in rates. The price of just about everything is going up. Food, soybeans, corn, energy, materials, including lumber. But the yield on the 10-year has been kind of trendless, but if you watch it, if you really look at it on a micro basis, it's in recent sessions has actually headed back down, as you can see, 1.5. So, you know, instead of just passing right through 1.6 or 1.7 on the way to 2, you'd have to give Tepper, obviously, a lot of credit, but I don't know how we can figure out what's really happening and whether it's manipulated, if you will, by the Fed and QE, or whether the market just thinks that things are transitory. Joining us to discuss this market dynamic, what it means for investors, Kevin Nicholson, Global Fixed Income co-CIO at Riverfront Investment Group. I think your view, Kevin, I guess you probably acknowledge that the Fed is in here, obviously buying, but a lot of these moves in prices, in inflation, in commodities, very likely, or very possibly, I'll say, could be transitory, so the 10-year maybe has that viewpoint.
Yes, I definitely think that the 10-year has bought into the Fed's idea of it being transitory. You know, we normally think of inflation when wages are actually rising persistently, and we haven't gotten that yet. What we have gotten, like you said, Joe, is that we've seen prices of lumber and commodities go up. However, we believe that this is transitory because we all knew coming into 2021 that once we got to March and April, we were going to see inflation go up because of the base effect, because of 2020 was so low. However, we think that from a fixed income standpoint, from the 10-year standpoint, part of the reason that we're in this range and actually yields have been coming down is largely because of expectations. The economic data that has come out recently has not met expectations, even though they've been good numbers. A prime example was last week's jobs report. They reported 559,000 new jobs. But they were expecting 675,000. So that's why you kind of see the 10-year right now actually not moving or not going higher.
You do see 1.8 to 2 by the end of the year. So it's June 10th. I just realized, I said that at the top of the show. I have to remind myself sometimes because time goes so quickly. But so it's June 10th. We don't have that much time left. I guess we have 6 months or so to get to 1.8 to 2. But you don't think during the summer that we make any moves really in that direction. You think 1.5 to 1.65 range bound for the summer because there's going to be no tapering. They're gonna maybe have some body language. Maybe a couple of Fed officials will talk about it, but no concrete even plans to say that they're going to start tapering. So we stay down here?
Yeah, that's what I believe. I think that you're not going to really see the Fed start to really make a decision until Jackson Hole. So I've been thinking over the last couple of months that it was going to be this 3-month period, June, July, and August, that the Fed was actually going to look at all of the economic data that came in to really make a final decision if inflation was actually coming in as being transitory, or if they actually needed to start to taper. And I expect that they will start those conversations or have that first taper talk in September at that September meeting.
Shepard Smith here. Thanks for watching CNBC on YouTube.